Hello and welcome to this webinar on the Baillie Gifford Japan Trust. My name is Amy Maxwell, I'm from Citywire and I'll be hosting today's session, joined by Matthew Brett. This year marks Matthew's 20th anniversary managing Japanese equities at Baillie Gifford. It's a good moment then to take stock of how Japan itself has changed over those 2 decades and how the trust is positioned for what feels like a real turning point. For years, Japan was seen as an economy stuck in deflation. But with inflation back, corporate reforms accelerating, and equity markets hitting multi-decade highs, the mood has shifted. Yet sentiment towards the trust tells a different story. Despite new market highs, Baillie Gifford Japan still trades at a discount to net asset value, a contrast to US, where markets are at records highs even though earnings are lagging. That makes it the perfect moment to ask Matthew how he sees this divergence, what's behind Japan's reforms and where the opportunities lie. And there's plenty to explore, from world-leading gaming and anime exports to the quiet but radical transformation of its financial system. From AI to healthcare, the story is one of structural reinvention. To recap on the structure of the session, welcome Matthew, thanks for joining me today.
Thanks, Amy.
Okay, well, congratulations on 20 years of managing Japanese equities at Baillie Gifford.
Thank you.
Maybe let's begin by looking back at your time. So let's go back to 2005. What was it like then, and how different does the landscape look today?
Yeah, I mean, I guess, some things, feel pretty similar, don't they? But some things definitely were different then. I mean, we're not talking about a huge amount of time ago, but, I really remember 20 years ago, when I visited Japan, having to print off pages and pages of notes in advance and put them in ring binders and bring them with me, because literally once you got on the plane to Japan, that was you cut off from many of the sources of information that we use. Nowadays, laptop and the iPhone, and just make sure you've got the right adapter and everything is fine. All that information is much more readily available. And of course, back then, some of the internet companies that are significant today were really still quite small businesses. They've grown a lot over the time. So there's been that change in where the opportunities are in Japan over the years. And I think, people talk a lot today about corporate reform in Japan. I mean, I think the tentative shoots of that were already present back in 2005. Then we obviously had the global financial crisis, which set things back a bit. But in many ways, the journey towards Japanese companies being more interested in their shareholders, probably did start around that time. Companies were already putting their dividends up a bit and starting to think more about shareholder value. And that process has accelerated over the years since, and it's become much more of a driving force of individual companies in the market in recent years.
Okay, and let's talk about how the market is perceived today, because 5 years ago, the trust traded at about a 10% premium to net asset value. Today, it sits around a 10% discount. The gap reflects more than sort of just technicalities, though, doesn't it? It's more about investor confidence. So in your stock picking in Japan, why do you think the discount has persisted?
Yeah, so over the years, I mean, the discount on the Japan Trust has been anywhere from a teens discount to quite a significant premium. And I think that really reflects, as you say, these different factors. Generally speaking, I would say that, we've had wider discounts when there's been a run of poor returns, either as a result of the stock market and people being less interested, or less good returns from us as stock pickers. And I think, if we go back over the past few years, the Japanese market has continued to do well. Over the past few years, coming out of COVID, our performance wasn't as strong as that of the wider Japanese market. We have a lot less in some of the most cyclical companies in Japan, things like car makers and banks. And as a result, our underlying portfolio grew in value a bit slower than the market over the past few years. Last 12 months, that's changed again. And the performance has been stronger, and we've seen the discount close in a bit from, a kind of mid-teens level to about 10%. And across that time, the board generally has been prepared to issue shares when the trust has been at a premium, and to buy back shares when the trust has been at a discount. And both of those actions, add value for individual shareholders over time.
And the situation is almost the reverse of, say, what's happening in the US market, where you've got prices running ahead of earnings.
Yeah, I think it's fair to say that, sentiment inside the US and outside of the US is very different at the moment. And to give a single fact on this, the market cap of Nvidia, which today is the world's most valuable company listed in the US, that market cap is slightly higher than the entire Japanese stock market. So if one held 100% of Nvidia, you could sell it and buy not just Toyota Motor and a couple of other things, but you could buy the entire Japanese stock market for the same value. And I think that gives you a flavor for just how different expectations have become in Japan. And as you say, it's not that earnings have been disappointing in Japan. They've actually been quite strong. It's just that hasn't been as fully reflected in stock prices. And I think, therefore, for me personally, I think that there's opportunity there within Japan, because you have things going well, you have individual companies growing, but at the same time, what you don't have is very high expectations. And clearly, from an investment perspective, it's probably better to start with expectations not at a very high level. And I think that's where Japan is an opportunity.
Well, let's dig into some of those opportunities now, because you spoke a little earlier about you hold a lot less in kind of cyclicals such as car makers and banks, but also your active share is around 84%. So that means that the trust looks very different from the index. So can you explain to me why is that, and why is such a high conviction approach so important when investing in an economy or in a market like Japan?
I think that's right. So when it comes to what we're trying to do, we're growth investors in Japan. So what we're trying to do is find companies that can grow their sales and earnings faster than the market over time. And those companies, we believe, will generally outperform the index over the longer term. And what we have in Japan, of course, is we have a very wealthy country. We have a country with lots of quite developed companies. And not all of those companies are going to be growth companies anymore. Some of the steel companies or some of the car makers or the big banks, they're not really growing that fast anymore. So if we want to have a portfolio of higher growth businesses, we've got to look away from the index, and we've got to look at fundamentally what is growing fast. Now, we're prepared to invest in big companies where they're growing fast, things like SoftBank Group, for example. But overall, the portfolio has a bias towards medium and smaller companies, because within an economy which is fairly mature, it's by buying those companies that are slightly smaller, that have the growth still ahead of them as they take market share from the big incumbents, that are the ones that we think are more exciting. And yes, that's what results in having quite a different portfolio to the Japanese index, and hopefully a better portfolio. Now,
you've spoken there about sort of rethinking the way you invest in Japan, not looking like the index. There are a number of other things that investors could rethink about Japan, especially in terms of how its citizens invest. So there's this whole $2 trillion wake-up call. I think in some papers that you've recently put out, you've described them as idle assets. So if you could break down kind of what are idle assets and how have they come about, and where is the investment opportunity for them?
Yeah, well, I think this is one of still the big opportunities in Japan. I mean, everyone knows that Japanese companies have vast amounts of cash on the balance sheet and that Japanese individuals also have vast amounts of cash. And how this has come about, I think, is partly as a result of look the tough times that followed the bubble in the late 1980s and the deflation that occurred after that. I mean, actually holding your assets in cash was a perfectly sensible thing to do. But I think what we've seen more recently is that environment has changed. We've seen inflation coming back in Japan, and simply putting your money on deposit at your favorite mega bank and earning virtually nothing in interest just doesn't seem a smart idea anymore. And I think what we're seeing, therefore, is the pressure building for individuals and for companies to do something with that cash and to make it work harder. And in some cases, they're putting it into the stock market or into real estate or into other assets that promise a much better return.
And of course, that idle, that parking that cash simply in a non-interest-bearing investment is actually going to be eroded away by inflation. So this is a whole new dimension for an economy or for a country that has only sort of seen deflation for the last 30 to 40 years.
I think that's right. I was talking with the president of Sumitomo Mitsui Trust Group, which is a trust bank in Japan, and they do asset management as well as banking. And he was saying, look, there's a whole generation of people in Japan who have never really seen inflation, and this is a new way of thinking. And I think you're right. It takes time for people to get used to that. But at the same time, simply having the value of your savings being eroded away through inflation is not most people's idea of a lot of fun. So over time, I think we are seeing that shift happening, and that pool of underused assets is trying to earn a better return, and some of that return undoubtedly is going into the stock market in Japan, and I think that is a big opportunity.
And so SBI Holdings is one of your top holdings. Are they benefiting from this shift?
Yep. So SBI, in the past, we would have described SBI as being Japan's largest online broker. But over the years, it's grown and grown. It overtook Daiwa. It's overtaken Nomura now to be Japan's largest brokerage. And certainly that's one place that people are turning to as they open what the Japanese call NISAs or Nippon ISAs, which are tax-free investment accounts similar to our own ISA in the UK. And those have been very, very popular as people are trying to get better returns on their money. And yes, we expect SBI to be a big beneficiary of this shift over the years.
Okay, now let's move on to some other things that investors should be rethinking about Japan. Let's move it kind of beyond the obvious. Let's talk about some innovation. Japan is known for being innovative, but there's a whole new wave, especially with AI. So SoftBank is your top holding, and it obviously is very, very close to that AI story. But how is it filtering through to the rest of your holdings also?
Yeah, you're absolutely right. SoftBank is very central to the AI story. It's got a big investment in ARM, which provides a design for almost all smartphones. It's recently invested in OpenAI, which is the company behind the popular ChatGPT models. So SoftBank really has been doing a great deal in AI. But yes, there are many opportunities within that area. Some of the other names within the portfolio that have exposure to AI include things like CyberAgent, which has been using AI to improve its adverts for its advert platform, or Rakuten, which does e-commerce, and it's been using AI to combine information from the different things that it does to give a much better and smoother customer experience. Or finally, we have a company called Bengoshi in the portfolio, which has been training a large language model. on a database of legal precedent, so that basically you can ask this specialized GPT type model questions about the law, and it can answer with an accurate basis on legal precedent. So there's a lot happening through the portfolio in that AI world, and I think as a whole we do believe that AI is going to be one of the really significant themes over the next 5 to 10 years. It's probably more exciting in many ways than the original internet because of the speed at which it's penetrating and the way it can touch quite quickly on lots of aspects of business and life.
And of course, Japan is also home to some huge characters. We've got Nintendo, we've got Sonic the Hedgehog from Sega. I mean, gaming is a huge industry, but gaming and anime are both huge exports for Japan culturally. And they've also got great margins. So tell us about the business model and how central these kind of creative industries are to Japan's growth story.
I think that's right. When people think about Japan, they tend to think, don't you, of kind of manufactured goods, cars, Walkman, things like that. But the gaming industry has been a huge success in Japan, and Nintendo has managed to build up these, very, very strong characters that have real global reach. And what is really exciting is that many of those characters are still being sold now, not just in Japan, Western Europe and America, but they're going global, which increases the opportunity set. And of course, AI really helps computer game manufacturers to develop the games faster, cheaper, better than they could before. But what's really hard is to develop the intellectual property. And this is an area that we've been generally adding to over the past 12 months. So, we hold Nintendo, but, we've also now got companies such as Square Enix, which, as you mentioned, does the Final Fantasy series, which has been going for 20 odd years, and also Sega Sammy, which, as you mentioned, covers characters like Sonic the Hedgehog, which, surprisingly, it's a long time since Sonic was created, but hit films being produced fairly recently off that intellectual property. And that move as well from just pure gaming into doing things like theme parks and films just allows that intellectual property that's been built up over time to be used for lots of different areas. So I think, gaming is one of the things that Japan does really well. It's likely to be a growth area in the future. So we're very excited about it.
And the point about it, how is it such a high margin kind of business model? What is it about the business model that allows it to operate at such a high margin?
Well, a very, very simple level. It costs a fortune nowadays to produce a really high-grade computer game. But once you've produced it, the cost of selling one more copy is almost zero. So you have these very, very high margins on your final few sales. And that, is hugely beneficial to the gaming companies. So the successful ones, yes, they spend a lot developing a game, but of course then they have massive sales of that game, and the latter sales are incredibly profitable. So I think it's all based really off that long-term intellectual property that allows them to do that. There's similarities here to I guess blockbuster films where, if you can reuse some of those characters, if you can reuse some of that intellectual property in different ways, you can then get very, very good margins on the back of it.
Excellent. Okay. Well, let's move on to some other areas of innovation within the Japanese economy. Healthcare. A lot has been spoken about over the years of Japan's an aging economy. But actually, some benefits to that is that they are tackling, or they are being forced to confront, some of those debilitating illnesses or illnesses associated with kind of aging society sooner, and coming up with some solutions around those. So Alzheimer's being one of them. So do you want to talk us through, you recently put out a white paper, didn't you, with some of the healthcare kind of innovations within it. So I encourage our audience to go and take a closer look at that. But can you talk to us a little bit about ISI, which is an Alzheimer's drug that you are invested with?
Yeah, that's right. One of the real challenges, obviously, of improved healthcare is that as people live longer, they start to develop different types of illness and different types of disease. And Alzheimer's is a condition that becomes more and more prevalent as people get older. And so, Japan, for example, has a big problem with Alzheimer's among some of the extremely elderly people. And that problem, is coming to us all in the longer term. But what ASI has is a drug called Leqembi, and what the drug does is it basically helps to remove plaques on the brain, which are probably one of the causal factors of the Alzheimer's. And that is hugely exciting because for the first time, we actually have not a kind of something that tries to manage the symptoms of Alzheimer's, but something that actually is trying to address the root cause of the problem. And I think, for me, what is really exciting about this is it all feels a bit like, how HIV and AIDS felt a long time ago, where, if we go back to the 1990s or whatever, HIV was considered pretty much a death sentence, that people would develop AIDS, become extremely unwell and die. Whereas nowadays it's a manageable condition because people can be kept in a state where they don't develop full-blown AIDS. And in the same way, it may be that on a 10, 20-year view, we're looking at something similar for Alzheimer's, that what's been considered an untreatable, inevitable condition of extreme old age may be something that if you can keep on top of cleaning out these plaques that develop in the brain, it may be that you don't just delay the onset by a couple of years. It may be that through this treatment combined with others, you can actually just keep pushing back the start of proper Alzheimer's so that it never actually properly gets going. And I think that's a very exciting opportunity.
Yeah, it is indeed. Let's also move on to staying on the theme of demographics and an aging society. Of course, you have less workers, which means that this whole surgence in robots or cobots to fill a labour gap or a shortage in labour could actually be a good thing, and it's solving a labour shortage issue. So do you want to tell us about robotic cobots and perhaps where they fit into the trust and the portfolio?
Yeah, I think that's right. I mean, as a whole, if we look back at kind of science fiction of the past and films and so on, we've got a lot of what science fiction showed us. We've got things that fly in the sky, we've got the communicators, we've got loads of those things. What we don't have generally are robots walking among us. And that, I think, is a piece that's starting to change. Autonomous cars, in many ways, are effectively a funny-shaped robot. But all of these things are possible because a robot with more awareness of its surroundings, can operate in the real world in a way that your traditional manufacturing type of robots, just can't. And cobots are one aspect of these. So these are robots that are lower powered, designed to work alongside humans, doing things like packing boxes or moving things around, and can be trained very easily by a human to help them with their day-to-day tasks. And I think you're right as well on that demographic point. I mean, one of the concerns maybe about the development of AI is, look, what will this do to the jobs market? But in Japan, there's a pressing urge here to keep things working with a working age population that's declining. So in many ways, any of these types of progress are just helpful in a Japanese context. And we've got names in the portfolio like Fanuc, for example, which is the world's leading industrial robot manufacturer. It's been pushing into cobots. But I think over the long run, I think there's going to be a lot of change in this area. And I think we need to keep alive to where the new opportunities are going to be coming from here.
And do you think Japan in particular has an advantage in using AI to treat real world problems?
I think Japan is in a fantastic place to do that because it's got some of the real high-end manufacturing skill in terms of making the devices. But of course, if those devices have a greater awareness of the world around them, then that's a massive gain. And also, a lot of Japanese software is perhaps a bit dated nowadays. And what AI allows is for people potentially to get more out of very legacy office type systems, without having to rewrite the whole thing. You can get data and you can manipulate it with AI and you can make progress. And I think one of the real benefits of AI so far has been in terms of productivity of people who write software. So someone working alongside AI can often generate code a lot quicker. And that is a real benefit in Japan where there's not a surplus of people with that skill set. So yeah, I think Japan is well placed to benefit from this area. At the same time, I think we need to be aware that there are other countries working hard in this area, and I think it's going to be a competitive one.
Okay. Now, we spoke earlier about some of the portfolio specifics. So you've got a high active share, so you look very different to the index. But let's also, for our audience, break down the idea of gearing. Your use of gearing is around 15%. So could you explain to us in plain terms why it's kept at that level and what opportunities or risks it brings?
So gearing is basically borrowing a little extra money in order to invest a bit more in the companies that we like. So if the value of the portfolio starts at 100% of the net assets, we can borrow a bit more money to invest in the equivalent of 115% of the portfolio. So what that means is if those assets appreciate over time, there's an added benefit to shareholders. And of course, in Japan, the cost of the borrowings is very low. And so, the hurdle that we have to get over for that to be value added to shareholders is lower than it would be in other parts of the world. And turning to the risks, the obvious risk is, well, look, if we're wrong and the share prices in the portfolio decline, then that process is accelerated by using gearing. And obviously, to be clear, we're using quite a small amount of leverage here. So we're only using, another, 10, 15% rather than a very big number. So that process isn't dramatic. But undoubtedly, if we have market setbacks or individual stock problems, it does cause pressure when that happens.
Okay. Okay, well, we're reaching the end of the interview part of the session, so we are now going to move on to the audience Q&A. So I've got quite a few come through on my inbox. First on the list is, what are the differences in strategy between BG Japan and BG Shin Nippon? So could you talk about what's different between the two strategies?
Yeah, so in terms of the similarities, first of all, I mean, they're both managed by our team. So they both are looking for growing businesses and investing in those businesses for the long run. The main difference is Shin Nippon invests in much smaller companies than does Japan Trust. So Japan Trust invests all the way through the market cap spectrum. So if we can find a big, fast-growing company like SoftBank, which is one of the 5 biggest companies in Japan at the moment, then we'll happily invest in it. And we won't go as far down the market cap spectrum as Shin Nippon does. So typically, we will stop at, something around 50 billion yen, very roughly, which is, say, 250 million pounds. So we go quite far down, but not as far as Shin Nippon. And the other small difference is Shin Nippon invests in a handful of private businesses, whereas in Japan Trust, we only invest in listed companies. So that's a bit of a difference as well. But the fundamental philosophy is the same. And I guess what we've seen in recent years has been, Shin Nippon has been more domestically focused than is Japan Trust because it focuses more on those smaller businesses. So that's also a bit of a difference between the two.
Okay, and the same question, similar question, is whether or not there would be any reason to merge the two trusts for performance-related reasons?
I mean, look, I can't talk about any specifics there. They're both listed companies with independent boards, and anything like that would be a decision for them rather than something for me.
Okay. Okay, so we've got another question here. In relation to AI exposure, I'm looking for Japanese exposure with the trust that I cannot gain elsewhere, but are basically they're concerned about US AI exposure, but they want AI exposure. So I suppose it's like, where are you getting your? It's geopolitics, isn't it? Wrapped up in which AI company you're backing. So I suppose, how does geopolitics play into AI exposure?
Yeah, so I think, the vast majority of the businesses that we invest in that are kind of, at the front end of AI are more domestic businesses.
Mm-hmm.
SoftBank is the exception to that because it's a big investor in US technology companies. But SoftBank, is under 10% of the portfolio, so it's not the overall driving force there. The other thing we've got access to in Japan is some of what I think of as hard technology companies. So companies, for example, that make semiconductor production equipment, which is then used to make the chips, which are put into the data centers to run these AI models. Now, that's an interesting area, and I think we've got some investments there. But overall, I'm a bit more positive about what AI can be used to do in terms of the applications of it, rather than necessarily the hardware that's going into it. Because I think over time, those areas, they can be pretty cyclical, and there's a lot of competition there. But I think companies that can use AI to develop their business model and do well, things like Bengoshi or some of the others that we talked about earlier, I think they're very well positioned to do well over the next while. And I think in terms of geopolitics, I mean, many of the Japanese companies we invest in AI are either domestically focused or they're basically global businesses. So, they're not just exposed to the US. If, for example, it turns out that China is a winner in the AI space, they'll almost certainly be using an element of hardware from Japan to do the manufacturing of their chips. And so, there is an opportunity there still for the Japanese companies.
I mean, would you say then Japan has a unique position in being completely integral to the AI kind of infrastructure?
Well, I think it's one of the important countries, certainly. And I think one of the benefits that Japan has as a country is, look, it's close to America. It's never going to be cut off from supplying American companies. But also, Japan has, perfectly good relations at the moment with other countries who are also AI players. And it's not seeking to cut anyone off from the technology. So in that sense, it does seem like it's well positioned geopolitically, but obviously, this is a complicated area and things could change.
Okay, we've got another question here about generational ownership. So how do you assess opportunities for growth in SMEs resulting from changes in generational ownership and arising from M&A activity?
Yeah, so we've actually got a company in the portfolio called Nihon M&A, which specializes in precisely that type of generational shift from, a small business owner who's typically built the business up over 40, 50 years and is seeking retirement, but they don't maybe have a natural successor. And Nihon M&A will help that individual to find someone to sell the business to. Mm-hmm. So that's at the very small end. And then as we get up into the listed companies that we invest in, it tends to be less of a problem, succession for those businesses. If there's not a family member available to take over, often they will turn to professional management at that time. The business will happily continue. But certainly, you're quite right. It's an issue at the small and medium company area. But yeah, Nihon M&A is trying very actively to help with that challenge.
Okay. There's still quite a few questions coming through. Hang on. So we have another one here on. Are there any sectors that you would avoid investing in, or that you're deliberately steering clear of?
Well, I think there's certainly some areas, big areas of the Japanese market that we have no exposure to, or very little exposure. So, for example, the car manufacturers, we have no exposure to a car manufacturer within the portfolio. And this is just because, look, Japan's really good at making cars, but they look a lot like the cars of the past rather than the cars of the future. And I think, as the world is transitioning away over time from combustion engines and heading in the direction of battery electric, that's challenging for the Japanese. And also, they're not particularly strong at autonomous vehicles. So on a 5 to 10 year view, we think their competitive positioning is weakening, so we don't invest in that area. We also don't have much in the mega bank area. Well, in fact, we don't hold any mega banks because, again, we don't see those as particularly high growth businesses. And in general, there's quite a few what I would think of as kind of older fashioned Japanese companies, and for example, the iron and steel area, or relatively undifferentiated manufacturing businesses that we tend to avoid. So we're much more tilted towards where we believe the future growth is, rather than some of these companies that they're perfectly decent businesses, but they're not ones that we believe have much growth ahead of them, in our opinion.
So cars, potentially an area where Japan isn't quite so innovative.
Definitely. Yeah, I think that's right.
So we've got a question here about corporate reform and the changing dividend culture. Are you seeing this play out within the portfolio with much more income?
Yeah, I mean, this has been a huge change in Japan over the 20 years, in terms of Japanese companies, paying more out in dividends and then doing buybacks. And now, the governance code encouraging companies to focus on their return on equity. And that's often resulted in, companies thinking about their balance sheet and cross holdings more. So yeah, I mean, these things are definitely helpful. I mean, for us as growth investors, we're mainly focused on the long-term sales and earnings growth. But, you can see from Japan Trust over the years that there's been dividend growth coming through, and that dividend growth has been caused by the growth in dividends from the underlying businesses that we hold. So yeah, it is a big trend in Japan, and it's one that I think is a very helpful trend. If a company has cash and it doesn't have a great deal of use for it, obviously as shareholders we would be supportive of that cash being paid out to shareholders either through dividends or through buybacks. Of course, if they have a good use for that cash, we prefer if they reinvested it in the business for more growth. But in general in Japan, there's plenty of cash for both.
Okay. I've got quite a specific question here around SBI Holdings, which has a major holding in Ripple. Okay, so according to various financial letters, it's equal to the present total value of SBI Holdings. So what's the connection between SBI Holdings and Ripple, essentially?
So SBI is an online financial brokerage initially, and then it's done a variety of other things in the online financial space over time. And it was an early investor in Ripple Labs, which is the originator of the Ripple coin. Now, this is an interesting question, and some people, I've seen the research myself, they've kind of tried to work out how much Ripple SBI holds, and then compare that to the price of XRP, which is the Ripple code, and made a comparison between the two. Now, when we talk to SBI, they say, well, the Ripple really isn't about being used as a store of value. It's more intended to be a source of transactions, and that is their main interest in holding Ripple is as a source of transactions. But yes, undoubtedly, if the price of Ripple goes up, I guess it's a good thing for SBI. But we would hold SBI even in the absence of Ripple. It's not the main reason we hold it. We're quite excited, for example, about the SBI Shinsei Bank. So they acquired this bank called Shinsei. They've turned it around, and they'll probably be thinking about IPOing it in the next while. We think they've added a lot of value by doing that. So personally, I think the Ripple thing is kind of interesting, but I don't think it's the core reason why one would be excited about SBI.
Okay. Plenty of questions here. We've got Warren Buffett has invested considerable sums in the major trading houses where he sees longer term value. Discuss.
Well, exactly. I think what Warren Buffett is identifying is that the Japanese stock market trades quite lowly rated compared with his typical hunting ground. And he's invested in those trading companies. Now, we have invested in trading companies for many years, but we've tended to sell out of them over the past couple of years. So we are kind of, I guess, to some extent, selling to Warren Buffett. Now, that on the face of it is a dangerous thing to do, clearly. But from our perspective, we've got a much wider opportunity set than he does. He is a very large investor now, and therefore cannot go down the market cap spectrum in the way that we can. And we've got a lot of respect for the Japanese trading companies, but they also have a pretty cyclical record of earnings. And over the long haul, I suspect that he is correct that these businesses are decent businesses. But over the shorter term, and by that I mean 5 to 10 years, it's perfectly possible that these companies have a significant earnings setback, and their share prices likewise. So it's an ongoing area of debate. So for us, trading companies are certainly very interesting, but they're not a big part of our portfolios at the current time. But I think that just reflects really a different opportunity set that we have.
Okay. Another question here about the SoftBank exposure. Do the other Baillie Gifford trusts own SoftBank?
So SoftBank is also owned by the open-ended, the Baillie Gifford Japanese fund, but it's not widely held outside our team. And I think one of the reasons for that in discussions with colleagues is a number of the other Baillie Gifford trusts have AI exposure more directly through, US type of businesses in that space. And so often what they're looking for from Japanese holdings is something that does something a bit different. Whereas in this case, SoftBank is the company that we have access to. Now, it's also worth noting, just while we're talking about SoftBank, a lot of people will be thinking SoftBank has a big connection with Alibaba, the Chinese internet company, and that would have been true a few years ago. But Mr. Son has largely sold out of that Alibaba stake. So the big parts of the SoftBank value nowadays are ARM, the UK-based chip design company, and then so we've got ARM, and then also the venture funds, so-called vision funds, which have a lot of earlier stage companies, and they've been acquiring a few things in the AI space. So, for example, the holding in OpenAI and some ventures to roll out cloud computing, etc. So I think it's absolutely fascinating that Mr. Son, who was an early investor in the internet way back with Yahoo Japan, and then was an early investor in Alibaba, and very successfully as well. He's now managed to be one of the earlier outside investors into OpenAI, which makes the ChatGPT model. So once again, he seems to have positioned himself, where the growth opportunity is. And I think that's something that's very valuable.
Excellent. Okay, with just a few minutes left, there is a question here, which I think maybe is a nice one to close on, is on macroeconomics. So Japan's position, given a global kind of slowdown, how resilient is it, and what defences does it have to sustain its position, and I suppose your portfolio?
Yeah, I think that's a very good question, because I think we need to distinguish here between Japan the country, Japan the stock market, and our portfolios. So, Japan is exposed to any kind of global slowdown. It does have a large manufacturing sector, and that would be hit if we had a big slowdown. And in general, the stock market is also quite cyclical because of those large weightings in some of those manufacturing areas, particularly cars tend to be very cyclical. I believe that our portfolios are substantially less cyclical than that. So in terms of the earnings of a lot of the internet type of businesses that we invest in, and many of the things we've talked about today, they're often not particularly cyclical businesses. And if anything, I think one of the reasons why we've not delivered returns that are as high as the Japanese stock market in recent years has been that lack of cyclical exposure in our portfolios. But in the event of a slowdown, I would expect that potentially to work the other way around. And actually, I would expect our portfolios to be quite a lot more resilient than the Japanese stock market as a whole. And therefore, I think often it's a time of slowdown or challenge that actually growth portfolios come to their fore. We saw that during COVID, which was a very bad slowdown, and that was quite obviously it's a very difficult time generally, but it was a relatively good time for our portfolios. And structurally, they're still similarly set up in terms of investing in those long-term growth opportunities that are fundamentally not as cyclical.
And of course, I suppose growth investing was a lot easier when you had zero interest rates and money was cheap to borrow to fund your growth. So we are in a different regime, aren't we? So.
Yes, I think that's right. Although in Japan, the multiples that growth companies trade on seem to assume quite a high discount rate already. So, it's not something that kind of keeps me awake at night if the Bank of Japan was to put interest rates up a little bit more.
No. Matthew, well, that is kind of all we've got time for today. Thank you so much for all of your perspective, and it's been fascinating to hear your insights into both the Japanese economy and also how you manage the trust. So congratulations once again for 20 years of managing Japanese equities at Baillie Gifford. And to our audience, thank you all so much for tuning in, and thank you for your extensive questions, which I hope we've managed to get through them, as many of them as we could. But if you do want to follow up, there are a couple of papers that I reference throughout the session. Do go onto Baillie Gifford's website for their healthcare innovation paper, and also to hear a little bit more about they're recently going to put out a paper about corporate reform as well. So do take a look at those. Thank you all so much.